Recording in progress.
Hey, Brian, my friend.
Hey, hello, Yvonne. How are you?
I'm good, sir. Thank you. Now, I got more questions for you. Isn't that
Oh, good.
wonderful? Hey, so tell me, what are the things that probably somebody that's going to come in and get a commercial on at one point or another need to hire? And then what are some of the common questions that we can ask or that the loan committee might want to ask to review the loans? And then what are our roadblocks? Tell me about those things, Brian.
Well, I kind of just call it the entrepreneurial's the golden trifecta or the triumvirate, however you want to refer to it. But I just like to tell people, and I know it's hard when you get started, but when you can, you need a bookkeeper, or you need to invest in the training of one in your office. If you don't, I mean, I say just go hire one, go find out the cost of it. I mean, you're gonna probably find that it's worth the expenditure. Financials, get a CPA, get a bookkeeper, get a lawyer. And what I would just went out of my head. I'm so sorry.
You said CPA, a
Yes,
banker, get to know a banker, an attorney for sure. And those are mine that I just use a little bit at a time. Like I use a CPA when I need a CPA, and then I pay them. And then I get an attorney and use an attorney when I need them. So it's not like they have to do it every month. But like you said, a bookkeeper, it's critical if you to keep good books.
right, because you're going to want to be able to provide um, financials upon request eventually. One of the standard loan covenants that's pretty much across the board, whether it's business lending at a credit union, as I've had experience in, or at a bank, you have to be able to provide quarterly financial statements for the most part
Okay.
on pretty much every time. I mean, there's some exceptions, very few, but for the most part, if an ongoing business where it's not just a singular real estate purchase, you're going to need to provide quarterly operating statements within 45 days of that quarter end. And that's a standard loan covenant, and that's throughout the life of the loan. It's a pretty standard covenant.
Oh, and what I know, I won't be stupid to the fact, Brian, that's a bad word, but I know that you want to make sure that we're doing business and we're doing business and revenues coming in and there's revenue going out. You want to see those numbers to make sure they're all being analyzed and going the right direction. What happens if we see a flaw in there? I mean, you as a banker, if you see something, obviously you're going to bring it to my attention. Hey, your payroll's a little high. You better bring it on debt back down or something like that.
Well, that basically, I mean, that's one of the things
Okay.
that's one of the benefits of when you do trend analysis, and that's a very standard tool, not just in the banking industry, but CPAs. I mean, any financial analyst is gonna, they look at the spread analysis. 3 to 5 years is the standard window where you're basically looking at 3 years to 5 years of revenue. You compare it, you compare the percentage of the expenses to the revenue, and then you compare each year to to the ensuing years.
Okay.
And so, in that way, and sometimes business models change. So expenditures as a percent of operating changes, and that's getting a little deep in there. But that's what the
Yeah.
point of looking at the financial trends are. We help identify any growing concerns, weaknesses. A lot of times they're aware of them. Sometimes they don't know how bad they are as a percentage of revenue. And and that's one of the things we do is when we start seeing things get out of line like that, we bring it, most of the time, like I said, they're already aware, but a lot of times I've had a few cases where, I've done a spread analysis and brought it to the owner's attention, and they kind of were like, no, I hadn't looked at that in a while, because they're busy.
Yes, we're busy doing what we're busy doing. So
Right.
what are the common questions that the loan committee might be reviewing for the loan or questioning you as where do you see that they might be asking questions on my particular loan or to get the loan? This is back to getting approved for a loan.
Well, I mean, the primary source that we're looking at, well, the first and foremost thing that we're looking at for repayment is cash flow, not collateral. Collateral is not the first. I mean, like I said, I always like to say this: Collateral liquidation is not a repayment source, it's a relationship ending solution.
Uh-huh. Okay.
Most of the time, unfortunately, and that is the case, so I always tell people, I want you to have your stuff. I'm not an auctioneer. I don't want your collateral. I want you to have it. I need your cash flow. So I need you to show cash flow.
Ah,
And that is probably one, especially for the small business owner that's trying to figure out how to pay as little taxes as they possibly can over and over and over and over and over and over again. You've got a guy coming in or a female coming in, and they've been having their, and we all kind of understand that, they've had their bookkeeper write off as much as they possibly can to reduce their taxable income.
gotcha.
Well, that's fine and dandy at tax time. But when then you decide that you're ready to go to the credit market to get a loan and you have no income to show that you can display an average monthly cash flow sufficient to cover all existing debt plus the proposed debt, then you have a problem. And there's a local bookkeeper in town I was just talking with earlier this year, and she's been working with her clients really, aggressively the past several years to say, you have to show income. Because, a lot of people say, well, I don't want to pay taxes. Great. So don't pay taxes. What's the cost of not paying taxes? What if you have to weigh it, is what's the opportunity cost? You want to write everything off and then you can't get credit. What do you lose by not being able to get additional capital, business expanding assets? I mean, what does that cost you?
You know,
So and these are very general notions right now. It's that's why you have professionals have this conversation with you.
I like that.
So
My accountant, when I had a business, my accountant would always tell me, make as much money as you can and pay your taxes. I mean,
mhm.
it was pretty simple. Just try not to circumvent that, just paying the taxes, because somewhere else that you might need additional money to keep your business afloat because you're doing something you love.
Right.
She would say, make as much money as you can and just pay the taxes on it. It's easy. I mean, I
And
say,
they can give you tax projections along the way.
yes, yes, very good. So what are
Right.
some roadblocks? What are some roadblocks, Brian?
Well, that's one of the biggest ones right there. Just not showing sufficient cash flow. Number two, just poor financial statements. And that's one of the biggest ones, just recurring, I should say, the thorn in their sides that I've seen over and over again, just poor financials. If it's not showing enough income, it's just poor financial quality. Really just, not having, not being able to generate a balance sheet, uh, not being able to, not having command of QuickBooks. So
Okay.
the statement quality is inadequate. These are for guys that are obviously usually they've been in the 2 to 3 year range of operation, 2 to 3 year range of operation, and they haven't gotten to that point yet. So that's definitely a roadblock there. Poor cash management, not really just not running the business of the business. They know how to run the business, but not the business of the business. Really just not having a good AR collection department. And a lot of times they are the department, but those are certainly roadblocks that I've seen. And then there's, of course, this is for any credit request, is one of the final roadblocks that I've seen is bad credit. You still got to have credit. Anytime, like I tell people, anytime you come to a credit market, you're coming to a credit market for a credit solution, you have to have credit. That's your report card.
Yeah. Okay. Okay. We're all looking for that 100, in this case, 800, right?
No. 675,
675. Yep.
which is it,
675.
in general, and there's some wiggle room there depending. Everything is you pull it. Everything I like to tell people is it depends. And now, I mean, it's going to be hard to, it's going to be hard to really, I think, advocate if you're under you getting into the 650s and lower. But if you're a few points off, 10 points off, and it's explainable, and let's just say it was a singular event, or something unusual, or maybe there was just something, you know, a lot of, I've seen people that just had $50 and they weren't aware it was out in collection. Every once in a while, everything is, it depends, but for the
Okay.
most part, we're gonna be looking at 675.
Okay, so that's pretty much the golden rule. But you know what, Brian? I appreciate you spending your time with me, answering some of these questions that we can just kind of throw out there on the internet and get people to call and ask questions. And you're so approachable. I never really knew that. It always scares me to come into the bank and see those big loan officers because I've always been, I'm sure I just take myself as anybody else. I'm just kind of nervous. I'm just kind of like, I'm asking for something that I think I don't deserve, but I do deserve, and not knowing how to do it or doing it right. So being able to sit down over a cup of coffee with you and making it happen, I just appreciate that and letting our community know.
Yeah, absolutely. I mean, and that's what I want to do is, you know, really just kind of you take just kind of eliminate that barrier, you know, whatever that barrier is, that just that, you know, very perceptible but invisible barrier to, you know, like we're just going to talk here. And I like to tell people, if I can help you now, I'm going to figure out how I can help you in the future. And I'm not just going to leave you there empty handed. I'm going to refer you to something that will help you get to the point where I can help you.
Yeah, I think the biggest thing is we're, I guess, intimidated, or we're just don't even know where to start. And we don't want to come into you and look like kind of like we don't know a whole lot. We want to come into you and feel like we're talking to you across the table educatedly in your terms. But it's okay to be transparent. It's okay to go.
Yeah, yeah, I don't, and like I said,
Good.
I try to tell, you know, just, yeah, and I've done it enough where, you know, I kind of, a lot of times I can figure out what, you know, what it is they're already going to need to know after a few minutes of conversation. So I tell people, don't be afraid, don't be afraid of what you don't know. You know, it's, you're the entrepreneur, you're the one living your dream. Don't let fear stop you. And you certainly don't have to worry about anything for me. I will be more than happy to sit down with you. It's gonna be a good conversation. I'm gonna help you get to a solution.
Awesome. How do they get a hold of you, Brian, again?
432-803-7503. That is my cell. My email, Brian, Brian dot Bell, Bell at prosperitybankusa.com.
USA. All right, sir. I appreciate it again, Brian. Till next time. Thank you
See you
so
then.
much.
Thank you. Thank you,
Bye.
Yvonne.